your company's having great success. Always nice when somebody says that to you, right?
That's great, thank you.
Particularly in an interview.
Thank
You're
you.
welcome. This, despite the fact that there continues to be the drumbeat that says eventually Sirius is going to get disintermediated from the car. Whether it's an autonomous vehicle that has a screen in the back with somebody sitting there not using it, or because of streaming and the ability to use Spotify or any of the other services through your phone. Hasn't happened yet, but a lot of people say it's still just coming. What do you say?
Well, it hasn't happened yet, and it's not going to happen, in my opinion. I think what people forget is technology is one thing, but what I worry about every day, first and foremost, is what is our value proposition, and how do we keep making that better and better. And so just this year alone, we've added Garth Brooks, a Garth Brooks channel, which has mammoth popularity. Our Beatles channel that we added in May even surprised me, at how popular it is. We continue to add Ricky Gervais, I think will be great, in terms of his sense of humor on our channel. And we just keep continuing to add other talent into our lineup that is the heart of our value proposition. I've been clear, and that is, I don't care how people listen to Sirius XM, I only care that they listen. The big change for us is in the last 3 years, we've improved our position so much in, let's call it for lack of a better word, the streaming environment, meaning the various ways people can get the service besides satellite. I have to tell you, nothing makes me more happy than to see, one of the 10 million Alexa ads that are running right now where they feature tuning our two channels, husband and wife arguing about our two channels. And that's a fundamental change for us in that our apps are significantly better, and we've invested in them heavily, and now they're available on multiple devices. And so our intention is to take technology out of the loop and make sure that we continue how we started this company, which is to deliver the best value proposition.
Right,
to our
which gets back to content.
Correct.
I mean, guys like me are always happy to hear that, because that's what you say is the defining characteristic,
Correct.
I guess, of this service.
And it's what people pay us for. When we talk to people, they make it very clear. They pay us, by the way, they pay us for the bundle. They don't just pay for one channel. They may only listen to a few most of the time, but on a Friday evening when they find that one channel that they don't have time to listen to during the week, or they listen to an NFL game the day they got to drive to the in-laws and they can't get it on television. By the way, then they'll come back and tell you they listen all the time. And I've learned in our business, it's not as much about what they actually listen to, it's more about what they think they listen to. Yeah. And it's our job to make sure we're providing that at a world-class level.
I'm one of those subscribers, although
I appreciate
occasionally I'm a little price sensitive. I mean, you guys are right up there in terms of what HBO costs a month, or certainly what Netflix costs a month.
Certainly not as high as HBO.
Well, not quite, but I mean, or maybe I'm just paying too much for getting too little. I got to
Again,
call my
you.
guy. I don't know. But where do you find is the sweet spot in terms of pricing?
I worry constantly about that question, and we worry constantly. That's the second half of the value proposition. There is the product we deliver and at what cost, and we're finding that balance. And I think what we're finding, David, is we have our customers begin to segment in that we have a very loyal group of customers who I won't say are inelastic, but they're less price sensitive, and we have a group of customers who are very price sensitive. And I think what we have to look for over time is how is that balance going to work as we get into deeper and deeper demographics particularly through our used car trials. We're certainly going to drop deeper and deeper into people who can easily get our service through the car who are less wealthy than the subscribers we have today. Right. Why investors shouldn't worry about that is our business model is so strong, meaning our gross margin, that those customers are going to be profitable no matter how we get them. And by the way, as soon as we get them, I'll be very clear with you, our intention is to try to get them, to deliver to them a value that steps them to a higher price. And I'm really confident we're doing that well. I think our quarter was a good indication. You saw ARPU growth. That's mostly driven by mix. And so, but it's where we got to keep our eye on the ball in the next 2 or 3 years.
Well, you guys, listen, have done a very good job in terms of anticipating what was coming in the future. But what is coming is also autonomous vehicles. Now, I don't know if it's 5 years or 10 or even more than that. You, I'm sure, have a view. But when somebody's sitting in the back seat of one of these things, and conceivably it's now another screen, which you've got to compete against the likes of Apple or Google, or I can name so many. How does Sirius stay in that game?
again, it's going to be, our strategy is to make sure first that technically we're not obsoleted in any way. And for instance, we'll be showing a new product that'll be introduced early in the first quarter. It'll be shown at the Detroit Auto Show, which will be our first in-car implementation of a product we call 360L, which seamlessly blends satellite and wireless together. So that, and you know what we learn from customers? They actually don't care how they get it. They only care that they can get what they want when they want it, which has always been the case. And this product does it really, really well. I think when consumers and investors see it, they're going to be very excited. I can tell you the auto companies are very excited about rolling it out, and we're well along the way on that roll. So I don't worry that we're going to be technically, that a technical barrier will come up. It comes back to, it is our duty to find out what it is that gets you excited about paying us $16 a month and make sure we deliver that to you.
Right.
That will change over time. But I'm confident we have the right people to figure that out and to deliver that.
In interviews past, you and I talked a bit about Pandora, or I talked to Maffei about it, of course. Liberty is your controlling shareholder. You talked about the value perhaps of free, but you weren't really that crazy about Pandora's business model. But you guys did do a deal with them, a convertible.
Right.
And then the stock has just cratered.
Right.
What do you think? Was that a good deal? Is Pandora kind of, frankly, in decline?
Well, I don't think we would have invested in it if we didn't think there was real value there. We continue to be impressed by this big base of listeners, 70 million. A lot of debates whether it's 67 or 73, but 70 million. And they have generated $1 billion of revenue. And like so many models, you see people come on here, they have great ideas, they don't really generate any meaningful revenue. This is a business that has meaningful revenue and meaningful, a huge listener base. Greg, myself, David Freer, our CFO, have joined the board. We're learning. We're excited. I can tell you, we're excited about having Roger Lynch on board, who's the new CEO of the company. And but we're gonna wait. We're gonna participate.
Yeah.
And wait and see, and we'll see where it goes. And we want to be as helpful as we can. I've always believed radio in this country is a $25 billion business, just in the United States. We're $5.5 billion, $5.4 billion, so we're, call it roughly 20%. Why wouldn't we want to figure out how we could participate in the other 80%? 90% of the other 80% is free. And terrestrial radio is a mess right now. And so we think this is in a good position. We own slightly less than 20%. We certainly have a good position on the board to evaluate this opportunity over the next couple of years.
You could certainly average down now if you wanted to buy more, Jim.
I don't think that's our intention.
As a board member, though, you feel as though the strategy that is in place right now is going to deliver value for shareholders?
Yeah, I think we have new management in place, and we're hoping to work with that new management in our board role to help both crisp up that strategy and then refine it for quick. I'm all about quick execution. You know that.
And the market moves so quickly these days. You can't be anything but quick.
And so, but I'm excited about it. We'll see how it goes.
All right, we'll be watching Pandora. Finally, how's Stern doing? Okay.
He's terrific.
Yeah.
His show's never been better.
How many years did you sign him for? This last go around?
He signed up for a 5-year renewal.
Right.
But we also have the right to his library for many years past that. I will tell you, Howard Stern video is coming. It will come, will come in the first half of next year. I think the Howard fans are going to love it. I've actually showed it to Howard, and he's excited about it. I tell you, he's all over it.
What is it? Is it just filming him while he's doing the show, or
it's a combination of things? Right. And I think when you see it, and when his listeners see it, they're going to love it. And I think it'll be a nice complement to what our subscribers get with the Howard show. I think his guests have never been better, and his interviews have never been better. So, I couldn't be happier with where we are with Howard.
All right, Jim, thanks for spending a little
time. Thanks very much.
Always appreciate it.
Thank you.
Jim Meyer, CEO of Sirius.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.